Special Friday edition of the Daily Blitz. Why? Because Google is ripping up over 4%. Those calls from yesterday, well, the weeklies, we saw next week calls and the weekly calls. The weekly calls are up over 700% overnight. And those next week calls are exploding in value as well. What a day trading. One of the best trading days of the year. And Tesla, they're back for more next week. We saw two different orders of the January 27th, 139 calls. These look to capture Tesla earnings next week. Model Y, Model 3 sales have, not exploded, reservations, I should say, and interest have exploded with Tesla with a 19% decrease in price of the Model Y to meet the EV tax credit under $55,000. Musk knows what he's doing with the Biden administration. He's playing them like a fiddle. Tesla also seeing a lot of weekly 131 calls that are in the money, but these expire today. So these expire in about 5.5 hours. So short dated flow. Again, we often see that. Facebook seeing 814,000 of the February 3rd 140 calls. These 140 calls are about $3 out the money. $815,000 of call premium. And then Square, Feb 10th, 730. Feb 10th, the 73 strike. I said 730 because it's 73.0. 73 strike calls, about $350,000 of call premium. These get earnings too. Remember, a lot of these names do capture the earnings event. So realize that when you play earnings, especially with expensive options, the options can, obviously go to zero if you're wrong. Tesla, for example, we saw those Feb 250 puts, which I said were a hedge, and Google and Disney doing nicely. But even Netflix today, let's say you bought the weekly 350 calls in Netflix with the stock at 325, even though it's up about $22, those 350 calls are basically worthless, right? That expire this Friday. They're down to the math here, pulling up on the good old option chain. The January 350 calls are about 21 cents. And I believe these calls were around $5, $6 just yesterday, right? So if you bought the 335, the 340s, the 350s, those calls are all down, even though Tesla's up over 7% today. And even if you bought deep in the money calls, you're barely looking at a green day. So remember, when you trade earnings, you do get high risk, high reward, and you need a greater than market maker's expected move. That is key. So take the at-the-money straddle in the weekly options. That's your market maker's move. And if you're getting directional via you're buying calls for an upside, you need the stock to move more than the market maker's move, especially if you're buying out-the-money calls and puts. You're buying puts, you need the stock to move down more than the market makers are expecting because you do have an implied volatility crush after earnings. If you want to know more, I will be having an earnings class next week. I will be trading Tesla. Maybe I will be buying some of the institutional order flow that we are seeing today. But check it out. Also, turn on notifications and subscribe because you will get this video probably, well, I don't want to say sooner, but you'll be alerted when the video drops on the YouTube. There will be a Telegram link in the chat, hopefully, if I know how to copy and paste. And that is it. What a day. Friday, the best trading day of the week.